The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. Pleasure to be here. This is the fourth show in the lineup today. Great, fabulous shows. All the way from John Logan to Larry Pesavento to Tom and Tommy O'Brien's. And do my best to fulfill that same requirement. Dow's up 82 at 17,571. S&P's up almost 10 at 2,059. Comp index is up 25 at 5,011. Gold is down $1.40 at 1067. I think we're getting close to some kind of a balance, but believe me, that 200-period moving average in the monthly chart is still my target. What was it, down at 10, almost there. Let me just check. GC, get the 120-minute chart away. Yeah, 1028. We're another 40 points, and we're almost there. Wow, this is leg D now in the monthly, in the Dow, in the gold continuous contract. Gosh, what a mess. All right, keep going. We've got high-grade copper down $1.90. You've got crude oil at 41.01. I remember I said crude oil just stuck in a trading range. Hey, wait a minute. We've got bonds down 11.30 seconds with the TLT down 19 at 119.58. This is going to be very important to monitor and make it real simple. 118 really needs to hold on the TLT. You've got the dollar up at up 10 cents at 99.80, and you've got the euro down. Great British pound is down. Had a question, so I threw in a little thing here that said we'll do a quick lightning round. So you know what I'm going to do before I do the lightning round? I see if there are 5 requests. And we've got 2 so far, so we'll see in the den exactly what we're going to be doing. So I want to follow up yesterday. The question was, we had Greg in San Mateo, California, calling. We were talking about the GLD. I said, I don't see anything yet, but we're real close to at least seeing whether the dollar is about to make a leg F with the DZZ, which is 2 times gold, on the gold short, and we'll look at the dollar euro, and I said we'll go through a bunch of things. So let's do that right now. Then if there are the requests, I'll go to the requests. So here we go. First of all, the dollar, DXY. The dollar is trading right now at 99.61 to 99.66. It's in a leg F, it's extended. I'm calling it an F for now, A, B, C, D, E. Now, there was a little confusion, at least not for maybe others, but for me. It's very, very seldom that you get the H pattern that goes to an M pattern, pull back, and then instead of just continuing a peak B or C that was made in the previous arch and going on to a D, to restart. I'm very fussy about the actual labeling of the restart. But I had no choice. I did that in the Dow. I did that in many of the indices. And I basically said, all right, we'll have an alternate count. But I'm thinking that this is really technically the low that was made on the 15th of October, many of the indices. That was a low that started another move to the upside. So here we go. If I don't do that and I start fresh, this is A, B, C, D, E, F. If I go to the D/B, if I go to D, that cannot be A unless it's an instant restart. So I'm calling it an instant restart because within 3 bars you broke out to a new higher high. So that says there could be a brand new A, a B, a C, and we're in a D. So either way, if we're in a D or an F in the daily chart of the dollar index, this is the dollar DXY, trading at 99.61, down 3 cents right now. I'm a little delayed, so it might be a tad higher or a tad lower. That says to me, I've got to look at the weekly chart, and the weekly chart says, no matter how I count it, this is a fresh gray C, having made a peak E at 100.39 back on the week of the March the 13th of this year. And even more important than that, the pullback has made a cup formation, and cup formations are very powerful in terms of trying to get back to the left side high bar. Question in the den, should make a leg C a monthly dollar before any pullback? Basil question mark. Excuse me. I believe so, but we're only talking about 100.30, 100.40. So we're talking about way less than a dollar. It's 3/4 of a point. So I don't see any reason why we shouldn't sneak up there. And then maybe we get some kind of a repellent line. What you do is you just sneak to a leg C at 100.40 plus, whatever that is, in the monthly chart. Extend leg C in the weekly chart, which suggests to me that it is a legitimate C. It's not a gray C because it's so long since we made that March high at 100.39, and we've already come down to the 92s, that this really is like a brand new move, especially the stochastic at 90%, which is really good, and the MACD crossing positive. Then I have to tell you something. One of the reasons why, hopefully, some of my subscribers who got my final chart, which is my Traders Corner this morning at 8:37, or I think it was 8:37 I sent it out. It might have been 8:36. Bam, it went out. And if they were lucky enough to get that the buy on the Dow at exactly the price we wanted, there were a number of trades in that area before it broke to the upside, suddenly gapped up at 942 or something. So if you were there and you read the very first line, you would have been right in. You would have been happy as a clam for a trade, at least at the moment. And the reason why I did that is my thinking here is that the market is generally, even though you've got the multinationals and all that stuff, the market has generally gone very nicely with the dollar. It doesn't always work that way, but there is a symbiosis that I cannot ignore. And within that context, I looked at all the charts, and I said to myself, you've been talking about this for some time, that markets that survive October and do very well in October going into November invariably hold quite well into the close of the year, and sometimes even close at the high of the year. I just... Don't make it complex. That was your thinking, and therefore you've got to go with it, and that's why we went long. I mean, I don't know what to say. Everything was saying to me, be careful, be careful, be careful. I said, be careful of what? The stochastic is strong. Everything's good. Don't overthink this. And if you get stopped out, big deal. At least you're giving yourself a 1.80 cent stop on the downside, but you've got yourself maybe even a 2-point move to the upside of potential, or even more if it's going to go to test the highs. And we don't look, this wasn't bear market material. Sunday night was bear market, continuation of Friday. But Monday was fabulous. Tuesday was really good, even with the pullback. I wasn't going to fight that. Okay, let's get back to our story. The dollar. And don't forget, folks, in the den, we've only got 2. I want to see if there are 3 more, we'll do a lightning round. So the dollar itself is acting quite well. And if you go to the DZZ, which is the two times short, yeah, it's making a potential peak F/B. But look at the MACD and look at the stochastic at 94%. I just cannot be bare. I can see a little pullback to 874, trading up 1. I can see a bit of a pullback, but it really does not look overly bearish. And look, you've got D, leg D in the weekly chart, and you've got leg E in the monthly. That's the bearish side for gold. I'm impressed. Let's put it that way. And I didn't want to sit here saying I'm impressed. I wanted to do something about it. So we still have some shorts and we still have longs, and things are not bad. I'm just real upset that we took profits, a 10% gain in our General Motors, never got back in. It's acting really well. And GE, where's GE? GE is up 16 cents. It's acting pretty well as well. So those are, you remember, that's one of my benchmarks for 20 years or something. I've been looking at G. So, okay. Now, so I said I'd look at this, and I wanted to go through the GLD. The GLD has gone to a D, and now it's in a leg E to the downside. And that's suggesting that the stochastic is something you've got to look at. Why? Because it's a 5.66%. It's failed to recognize any little bounce intraday. It is just flat. It's off its low, which was at about 3 point something. What was it? Let me just check that. 1.65. No, that can't be. Stochastic. Stochastic. Yeah, there we go. Stochastic is. Oh, why am I not getting it? Okay, right here. The stochastic. Oh, the slow is 5.26. Oh, yeah. You know, I'm right. It was down at 1.99. I mean, I've never seen this. No, I shouldn't say I've never seen it. I've hardly ever seen it. The slow stochastic was at 0.78. That's equivalent of 99.22 on the upside in those big bull moves. Talk about oversold, but let me tell you something about oversold. Oversold can stay oversold for a very long time. Stocks and indexes that make lows, 52 yearly lows, let's call it, can continue making lows. Stocks that make yearly highs can continue until there's a major change in trend. All right? So I don't want to get in front of the gold, the GLD. I just don't see anything. So big deal. It rallies, and it rallies to what? 104.91 where it was a week ago? I mean, so far, I just don't see anything. That's why I'm favoring the dollar just right now. But it is very close to, at least on the 120-minute chart, the dollar is made a G, an unusual G in the 120-minute chart. It's pulled back quite sharply, but it's running quite strongly. So maybe it's stuck in a little bit of a range with slightly higher highs. It can go up 80 cents, remember, towards that all-time high. And then maybe it pulls back. So that means that I've got to watch the GLD ratio of the MACD to the stochastic real closely, because it's really going to take a move of about 6% or more in the GLD to even get a chance to make a turn of significance. And not only that, this is very important. Remember the 103.34 low that was made, 103, I wrote it incorrectly, 0.43. Let me just change that. 0.43, not 34. 0.43 low that was made the week of July. I think it was the second week of July. Yeah, the 24th of July. At 103.43. On last week we took out. We went to 103.04 and closed at 103.56. That was a better close because it was above the low that was made. This week it looks like at 102.32 it's going to be really tough to close. This is the last week that it can do. You've got two bars in which, in the arch formation, Chapman wave lowercase h pattern, you've got two bars in which to make that low. If you don't make that low and then reverse back above 103.44, close above 103.43, that's not good at all. So this is a very important week. So I did that for Greg. So in other words, you might be close to some kind of a bounce, but a lot depends on the dollar. And I'll be watching that real closely. I'll be back, Basil Chapman. I'm going to show this chart as we go out. It is the chart.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back. So let's do a couple of things right here, and let me see if I can get this right. So that's there, and that gets moved over to the right. There we are. Everything's back again, normal. So I wanted to do a couple of things. I wanted to also talk about, just for the moment, I want to talk about the VIX index. See, the VIX index has made a peak D. I missed this, actually. I don't know why. I don't have it in my daily chart that I usually show right here. Somehow or other, I haven't got that. It seems to be a little different. The VIX, all right, well, I'll try to fix that up at some point. But in the meantime, back at the ranch, what we're looking at here is that the VIX made a peak D at, I didn't type that in, 20.68. 20.68 usually says that's pretty heavy selling. You know what? When I looked at this, I thought to myself, if you said to me, Basil, the VIX index is trading in the 20s. Where do you think the Dow is? I probably would have said the Dow must be under 17,000. Well, we haven't got that yet. We went to 17,000, what was it, 180? No, 17,210. You know, this, I am impressed. I'm impressed with the way the market is holding up. And I think that that the bias, at least going to Thanksgiving, could be that if the 17,300 to 200 area holds, We could be in for a surprise if there's a slightly higher highs and slightly higher lows, at least for this particular phase. And then if we hold into Thanksgiving, you've just got December, what is it, 20 days or less, something in December that you trade. So there's going to be just a very important period. And it's an important period because it's saying, as I said yesterday when I was talking about the market, what else can you put your money in? Where can you get the kind of growth that is more than, let's just say you're really good at picking munis and you're able to find a muni that gives you 4.2%, and that's tax-free. So that's like 6 or more percent, right? That is remarkable. You're also taking a risk because at some point we know from the overspending that the municipalities are going to go through a really tough time. But in the meantime, they're holding well. So Dow's up 109, S&P's up 12. I like that ratio. And I like the ratio because I like up 0.61 in the Dow. Actually, no, I would have preferred if it was up 0.61 in the S&P 500 stocks and up 0.58 in the Dow. But that's okay. Not complaining. Meantime, back at the ranch. So the question was in the den, Basil, a portfolio manager. Remember, I'm waiting, folks, for one more stock out there, and we'll do a lightning round. Basil, a portfolio manager at a momentum-based mutual fund, is watching those stochastics like a hawk, right? You know, I don't think so. I think that maybe today there are more and more technicians in the fund area, but I have to tell you that I've been looking at this for a long, long time. I mean, one of the reasons why I left Fidelity was because I didn't even think anybody was reading it, even though it was good work. And they said it was good work. But so few fund managers were even in, it was like fighting it just wasn't worth, I mean, financially it was good, but it really, ethically and morally and in every other way, it was very frustrating. So now I think they do a lot more technically, and yet not nearly as much as they should. So, okay, yeah, we got a couple of things in the den. Now I can go through it, and I'm going to run this. So the question is, Brookline, Mass, munis, any good? Well, Brookline, Mass is, I think that they're committing themselves to expenses that I think they're going to pay a penalty for. So I think it's really good. It's probably AAA. I mean, it's pretty good. It's like Newton. Maybe Newton's a little bit better than Brookline. It's one of the highest rated munis, I believe. But I would say getting in now, I would treat it as a 1 to 2 year yes for munis. And then I in 2 years' time, I'd say be very careful of munis. Okay, now let's go. We've got Oak. Oak is One Oak. Remember, we had a call from, I lost my notation. We had a call some time ago from Georgia, New York. We were looking at Oak. It wasn't in it, but we were looking at it because it was always an interesting stock. And I said that a lot of things have to happen. It did have a really nice bounce, and now it's making lower lows on the monthly chart. It's hard to believe, but Oak is going to the 200-period exponential moving average, which is really something because you're talking about a stock that was in the 70s. It was at 71.19, September of 2014. One Oak Inc. trading right now, Oak at 29.41, up 96 cents, having made a low 4 days ago of 27.44. And the 200-period moving average is right there as we go to the break, 228.46. I'll talk about that when we get back. This is going to be a lightning round, so I want to do it real quickly. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. Okay, lightning round. Here we go. Oak. Oak is One Oak Inc. It's trading at $29.39. It's up 93 cents. It looks terrible. It's hit the 200-period exponential moving average. If ever there was an opportunity for it to at least try to rally, this is it. So this is $29.37. If it breaks under 27.44 in the next 3 to 5 sessions, this is just going nowhere. It is really looking very poor. This is the opportunity to move. If you want to nibble at it, you can nibble right here at $29.39. I actually wouldn't even give it more than 40 cents as a stop. Why? Because it has to go back to the high today where it got repelled to the 9-period moving average at $29.91. It needs to get to, if Oak, by today's Wednesday. By Friday afternoon, Monday morning, if Oak is traveling in the 30.60 or higher area, there's a real good chance that it can have a bounce, and that bounce could take it to 32, maybe 33, and that's if the market stabilizes and has a slightly higher move to the upside. Next thing we're looking at is the British pound. I think it's the EUR. Oh, you wanted the EUR GBP. I did the EUR Great British pound. Let's go. There it is. Looks terrible. In fact, it looks very much like it's going to retest the low of the 17th of July, the low of 0.69352, and the resistance is at 0.705. If it does not break above 0.703, by Thursday, Friday the latest, but in fact takes out yesterday's low, then you're gonna have to wait because it's probably going to test the lows rather than have a bounce. That's the EUR-GBP. That's the Euro/Great British Pound currency pair. Next thing we want to look at is HSIC, and we're going to go to our callers in a moment. Breaking out, it looks great. I think we spoke about this the other day. I said Henry Schein, great company. It looks like it's leg B. This is leg C in the weekly chart. How did I miss that for my subscribers? Can't put it in red. I'm putting a big check. Looks great. Yeah, you could be double topping, but I think this is actually one of those. The leading stocks making new highs tend to continue. I love it. So it's looking good. If you're in it, I think you're most probably in it. I put a stop on a very small position at 151. Just to take something off, because if it breaks 151, it could pull back and have a 2-3 week consolidation. Right now, it's actually looking really strong. The next one was Boeing, BA. Boeing is at 147.63. It broke the Chapman wave falling X in the daily. The weekly looks very strong. This is why I like the Dow. You say, oh, Dow's up 130. Woohoo. Next thing we're looking at is at 149.60 level, the high of October. That's really what you want to take out. Takes that out, it's leg C. Boeing would be very important for the general market if it can move higher. And I've got a bunch of emails that I'll go to, but first I'm going to go to our caller, Robert in Chicago. Robert, how are you?
Basil, thanks for taking my call. I called about 3 weeks ago about Procter, and I'm just returning the call. I thought we would see it come down to around a 72, 71, 70. It hasn't done that, so the technicals were poor back then, so I'm calling back to see if there's any changes.
Okay, there are a couple of changes. There are subtle changes, but they're really important. But the trouble is we're only in Wednesday. In fact, right now, we're not even halfway through the week. We've got another hour or so to go. So this is what I'm looking at. It came down, but it only came down to 73.95. We would have liked it to come down maybe a tad more. That's because of the price we were looking at. This is what I'm going to recommend. So this is a stock. Just to remind me again, you have a position, but you wanted to see whether to add. That's the way it worked?
I do have a position, and
yes.
I have no idea if I'll add or I'll go short. Either way, it doesn't bother me.
Right at the moment, as a short, I think it goes into that dividend area with stocks that are holding reasonably well after making lows on August the 24th, and this is one of them. So I'm going to say to you, because you do have a position and it's more like a dividend position, I was going to say, if you want, because it's acting quite nice, it's up 16 cents right now, which is not great, but it's acting for a dividend stock. It's saying it's not being sold. So this is real quickly. I want to do this. I'm going to say to you, if you have the patience and you can wait just a little longer, I'd still wait to see if this bar is going to be the bar of 3 days ago. Going to 74 is going to be, if that's going to hold. But I'm also going to say to you, I would not be shorting this. I might think of shorting it on another rally. I'd like the H to go to an M pattern towards the 77 area. But there is a trade here, and that trade would be if it holds today and 75.26. It holds through 2 o'clock, and then suddenly at 2 o'clock, you see it go to 75.35, 75.40, if it can do that, towards the high of the day. I'm going to say to you, it wouldn't be a bad idea just to have a very small position, and that's going to tell you whether this is going to be a short or a long. Because if you have the short position, you're going to know intraday how it's acting and reacting to the general market. And the reason why I say that is because if by Thursday it's even able to get to 75.75, which is really shouldn't be a big deal, but if it can get there, then I think it's going to take out the high of 76.01. It's at that point going towards the 77 area that I'm going to say, okay, is now the chance to short it for the $2 to $3 pullback. And all the time, what you're really doing is you're trying to build up a little bit of a kitty so that you've got a cushion for your core position. So it allows you the next time you want to either make a larger position, it gives you that cushion. So I'm just thinking of small trades up and down. But if you want, you could also just sit back and wait and see if it breaks 70, if it breaks 74.50, it's probably going to go down to the low of the 74 area. But I'm just thinking if it holds and it starts to move a little higher today, you could have a nice quick trade towards the top there, and then we'll see what happens. But in the meantime, standing still is not a bad idea as well. Hope that helps you, Robert.
Thank you, Basil.
Okay, good. So that's Procter & Gamble, folks, trading at 75.28 right now. And it is in that category of the dividend stocks that normally fund managers would try to kind of gravitate to. I don't know if it's a short to go down to the 72s at this particular point because they had such a good move three days ago and yesterday, although it gave some of it back. But look, it's trying to re-garner that energy. So we'll see on Procter. But as a long-term trade to the upside, I wouldn't be doing that. And even as a trade to the downside, it's just in the middle. It's in a little bouncing channel. Okay, let's go back to our story. And the question was, where was I? Oh, let me go to my emails. Emails all the way. Julie wasn't first. Adam was first. Adam, AXP. AXP, you stuck in two, huh? Okay, AXP right now, American Express. See, I love the way Visa is acting, and I love the way I prefer Visa to MasterCard, but MasterCard's also acting well. AXP is more a short, I think, than a long. I don't want to do anything. AXP, if it takes out 70.21, I think it goes even lower. The monthly chart is very poor. The weekly chart is very poor. I wouldn't do anything, and I'd probably say if you want to do nothing, you can wait until it bounces to have the opportunity now. Towards 72.17 to 72.50, that would probably be an area where you might even want to think of shorting. AXP, not my favorite. The question was AXP and JPM. I'll stick that in. Why not? JPM, JP Morgan acting quite nicely, part of that XLF area, which I think is kind of ignoring the interest rates part of it just at the moment. They're independent. They're trying to bounce off the XLF. Is trying to bounce off the 200-period moving average. So JP Morgan, I would do this. I don't know if you're short or long. You just want an analysis. It made a peak B. It's acting extremely well. I'm inclined to say it's 66.90 for a 1-point stop. No, an 80-cent point stop. If you have 0.80 cent stop at 66.90, if this thing can go into the gap above, the gap 67.25, that would be my target on a very short-term basis. And if it closes above that, I think it can go higher. So JP Morgan looking good. I do that as a trade, 80-cent risk for a 1.5 to 2 point gain. Okay, we got John in Philly. Hi, John. How are you?
Good morning, Basil. Thanks for taking the call, sir. Basil, I wanted to ask you about the S&P 500 cash.
Yes.
And specifically, Basil, is this a falling axe pattern that's on the verge of breaking out?
Great question, because I've already done it a couple of times with the charts that I've shown this morning, and absolutely it is. Now, let me do a couple of things. I like to use it in sequence with the MACD and the slow stochastic. So let me just say, the on-balance volume has not yet double bottomed with a spike to the upside. It double bottomed, but it hasn't actually spiked higher. So that says to me, okay, do the homework in relation to the price, because price is the arbiter of the trend, not the technicals. We know that from experience. And the price says that it has just snuck its head against and now just above the dash line. Let me make this bigger so people know what I'm talking about. So let me just look at the chart on Tiger TV. Yeah, I'm making it bigger. And I'm going to make this in green because green is a breakout. Oh, you can't even see the green. Let's make it green, 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 green. All right, let's make it that green. Okay, that's showing you, and let me make it thicker. Wait, there we go. That's showing you the downtrend line. This shows you the falling axe really looks, there's the handle, there's the axe blade that expands. Think of it as a cone formation, an expanding cone, and now we've broken the top part of the resistance of that cone, and the day is young, so we can't say it's broken down on the daily chart. We can say right now it's broken out. So I'll grab the 120-minute chart, leg A, peak A, leg B just beginning. I like what I'm seeing, and I like the fact there was so much skepticism going into the move on Sunday night into Monday. Even me, I have to put myself in that category. And when I did my homework last night, I just said, you know what? I think we're going to go higher. And it doesn't tell me how much yet, But what the rule is in the falling axe formation, John, if this takes out the dash line and closes quite sharply above it, in other words, I would have to say it needs to close towards a 2067 on the S&P up 16. It needs to actually get to 2072 or 3.
Right.
That says that the dash line now becomes a support level. You might find that, in fact, it goes another day higher, and then it comes back and retests, and the retest will be the dash line. If it then closes below the dash line, that's the H pattern, and that says be careful. But at the moment, after the candle of, Monday, the little doji candle of yesterday, and now breaking above the high, 2066.69, 2067.97. We've broken above the candle wick high of yesterday. That's, to me, in my work, that's a very big positive. I like it. And now let's go one step at a time. The resistance level will naturally be the gap down that we had on the 12th of November, 207.229. And the day before, 207.485. So that gap, the 2-point gap between 207.2 and 207.4, that's really what you want to see pierced, and you want to close in the candle of the 11th. If we can do that by Friday, I think there's a really good chance that we're going to, I don't know yet if we're going to go to break the highs, the all-time highs of May, and that would be 2,134.72 in the S&P, but certainly the high that was made on the 3rd of 2116, that would become some kind of a let me put this clearly. The 2090s is going to be very strong resistance. But boy, from 2067 to 2090s, I wouldn't complain. So I like what I'm seeing. The day is young. You don't want to see a break under 2055 in the S&P intraday or on a daily basis. That to me would be a level that says, uh-oh, starting to fail. So I love what's going on right now. You got the MACD that still has a long way to go to be positive. The stochastic has turned up. It's at 25%. So it is in the Chapman wave methodology, John, the stochastic is given a buy signal. The price is given a buy signal. When it goes over 20%, it's a buy mode in the stochastic. You have to have the price accelerating as well, which is done. The one missing ingredient is a buy mode to say that you're in not a gray A, but a blue A. That says you're in a buy mode with the MACD crossing positive, and it's got a long way to go. It would take the S&P a good 20 points, I think. Might even be 25 points on the upside to get the MACD even to get close to the green line, close to the red line. So
Basil,
that's a lagging
so
indicator. So does that help you a little bit?
Yes, thanks so much. I will hang up now and just ask one last thing. If you might share, if this is a breakout of a falling axe, what your projection is. But thanks so much. That discussion was very helpful.
Let me just do that now. I forgot. I was about to do that and I completely forgot. 2019 was the low on the 16th. The breakout point is at the candle right there at 2066. So if I can actually remember what I said just a minute ago. So I've got 44 points. I would take 44 points from this doji candle high. First of all, in fact, let me just do it as a measured move. Here we go. 1, go there to there. And now I'm going to give you a measured move. And we'll talk about, it's a great question. I should have done it before. So copy and paste. All right, so I'll do this during the break. Basil Chapman, the Dow's up 146, S&P's up 17. I'll be right back.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Hi, folks. We've got Daryl coming up. Don't forget, great show. And let me just continue. Oh, yes. So the question was, what's the implication of the Chapman wave falling axe formation? The implication is if you break the dash resistance line, close above it sharply, treat it as a support level, you can get a 1-to-1. Technically, the 1-to-1 is from the breakout, and that would take you all the way to 2106, underneath the previous high that was made recently of 2116. Yeah, 2116. But I don't do that. I go step by step. You cannot get from A to, let's say, A to F without going B, C, D. So that's what I do when I do expansions as well, the Fibonacci or my own expansion. And that says from this candle's low is the conservative way for me to do it. And that says the first step would be 2091. That is a huge move from here. So that is just, we have to first see if we break them, close nicely above today. And tomorrow you have to have another good candle, or at least by Friday. Because if you start to break underneath that dashed line, you're starting to fail. And remember, the technicals need to, I like that at least the stochastic or the mag, one of them needs to be confirming the rally. So, okay, let's get out of that question. Let's go on. We've got, so we had Adam, we've got, oh, next is Julie. Julie asked about trends and the XAL. So IYT is the trading very nicely off the candle yesterday, but I only put this in the H to an M pattern right now. It is good. It's looking good. If 146.70 up, $1.71 up, 1.21%, much better than the Dow and the S&P, but still, it's in a retracement mode. I'm going to just say that what's happened here with the trannies is that you've got tremendous support that has to hold between 143 and 142.5. If that gets taken out, that's a big negative. Right now, there's enough energy to go a little higher. But if you look at the XAL, that's the ARCA Airline Index. Yep, ARCA Airline Index. That's just okay. And it should be doing way better. And it's just okay. So I'm putting this into the category of just consolidating sideways, being dragged up by the market rather than leading. Number one. Okay. Next one, Walmart. This is Sarah wants Walmart and RTH. So the Walmart is, it could bounce. And it's doing that off the low that was made recently. Oh, good gap up, good bounce. But it really is just a bounce for now. If you want to treat it as a trade, now is a little risky. But, okay, two things real quickly. Walmart at 60.79. It's about to bump into resistance. If it can pull back in the next 3 days, if Walmart, if it breaks out, it's kind of gone. It's a hard trade after that. But if it can pull back just a little bit to 60.20, let's make it 60.20. If you want to treat it as a trade that's trying to find energy after being really decimated, and it's technically really improved a lot, then it's not fundamental technically, then you can nibble on a little pullback, a 50-cent pullback, have no more than a 50-cent stop. It's really got to work. It's just got to be like it wants to go up and it's pulling back just because it has to have a breather. And that's what you want. And then what I would do, if you get it, I wouldn't get a big position, small position. If it takes out the high of today, 61.07, let's go to 61.20. That's very good. That's a very good sign. And then you're looking at the 9-period moving average of the weekly finally being taken out on the upside, and you can run, and I'd have a trading stop. But it's not my favorite. Definitely not my favorite right now. Retail stocks, the RTH had a gap up yesterday. It's holding well. This is going to be really important going into the season at 76.36, up 43 cents. I'm going to say to you that the most important thing about the RTH index is that it must not slide under 75.59. It's at 76.36 right now, up 43 cents. If it starts to trade in the gap, my guess is that it's going to start to fade again. What you want to see in the RTH index is 77.20. Just got to break that 79.69. Just treat it as if, oh, just an accident. I want to go even higher. So where are we right now as we go, as I wrap up, and you're going to go to Daryl? I like what I'm seeing. I think the Dow is acting very well. This is not bear market material at the moment. So I like what I'm seeing, and I think we can go a little higher, and we'll treat it one day at a time. I'll be back tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.